So are we live? Let me check. Are we live? Everyone? Thumbs up दे दो बच्चों फटाफट से and let me know. Are we live? Okay. Just 1 second more. Let us check. Check. Are we live? Not yet. Okay. Yeah, so we are live right now. A very good evening everyone. Good evening and welcome back to yet another very exciting session with you all. That is finance news for the month of February for the upcoming RBI examinations. This is part 1 for the February edition of the announcements that came place for the financial news. Starting off, this is your friend Ishan Gupta. Let me welcome you all and a very happy Independence Day to each and every one of us. Let us begin our session with this very exciting note. So right now the first news that is coming up for the month of February, that is it is related to the foreign exchange reserves. It is related to what, students? It is related to the foreign exchange reserves. So what is foreign exchange reserves? What is foreign exchange? For that matter of fact, what is foreign exchange? Let us take the concept in a brief. So there is India, and the monetary system of India is governed by what? Reserve Bank of India, that is the central bank. As you might be aware that central bank, that is the RBI, has various functions it performs, which includes and it is not limited to the currency authority. So in India, the currency authority is what? It is the central bank, that is the RBI, except for 1 rupee notes and coins, which is done by Ministry of Finance. The RBI is the main currency authority, and in India, the official currency is INR, that is Indian National Rupee. Okay. Similarly, there are different, every country has their own currency. For example, in US, their currency is US dollar, which is again monitored by their central bank, that is the Reserve Bank. So similarly, other countries like Britain has their own pound, China has yuan, Japan has yen, and so on. So what happens is, this is known as the foreign currency. This is known as the foreign currency or foreign exchange. That is our currency, that is Indian National Rupee, INR, and the US. Presently, US dollar is treated as the reserve currency. What is the meaning of reserve currency? That is US dollar can be used all around the world. It is acceptable all around the world for imports and exports, especially when we are dealing with importing of oil. So this is known as foreign exchange. Every country has to keep reserves. Every country has to keep reserves of foreign countries, that is, for example, US dollars, for example, pounds. In Indian context, let me explain in a bit more detail. So as you might be aware, our Indian economy is highly dependent upon import of certain materials. For example, the biggest import bill is raised by oil, that is crude oil, कच्चा तेल जिसे बोलते हैं. It is the maximum amount of import is done, that is the first topmost item is oil, crude oil, and for this we have to pay in international currency, that is US dollar. Similarly, any international transaction, whether it being import of services, whether it being lending of dollars, that is giving loans, grants in international market, we require foreign currency. Powerful foreign currencies are kept as reserve by India, and all the countries keep such reserves, that is US dollar, pounds, euros is this is yen, etc. So powerful currencies are kept as reserves by each and every country, including India. So these foreign currencies help in the time of importing or settling the import bill, etc. Because in international market, there are international currencies are accepted, not INR. As of now, Indian currency, that is INR, is not that powerful. So each and every country has to keep reserves, and the responsibility or the custodian, let me just check what is this, or the why is the pen not working? Just one sec. Or the custodian, dekh rekh ka zimma, who is the guardian of such foreign exchange reserve, who is the person, who is the institution that will deal with the foreign exchange reserves? It is the RBI. RBI is the apex institution which has another function of acting as a custodian for foreign exchange reserves. So in this financial news, we are talking about that foreign exchange reserves rise to 1 month high. It has reached 1 month high, that is 622.47 billion US dollars. India's foreign exchange reserves rose to the second straight week to a 1 month high of $622.47 billion as on February 2, the data from the central bank showed. So this data you need to memorize again for your examinations. The reserves rose by 5.74 billion in reporting week, the biggest rise in nearly 2 months. And again, as per news, reserves had risen by 590 million in the prior week. Reserve Bank of India intervenes in foreign exchange markets to curb excess volatility in rupee. So what is this? This is another very important point regarding which we can discuss on this point. What is this? Let me explain. So what is foreign exchange market? As I mentioned, India has their own currency, right? INR. And US has their own currency, that is dollar. So there is an exchange rate that is developed between these two currencies, which represents two different economies, that is India and USA. Why I am taking the example of USA? Because it is a much simpler example. Again, US dollar is being treated as a reserve currency, that is, it is accepted all around the world for various transactions in the international market. So an exchange rate is developed where currently it is around 82, 84, 85 rupees for $1 US, that is roughly, now I am not getting into much more detail, roughly if you want to buy or you want to sell $1 US, if you want to buy $1 US, you go to the bank, give him 82 rupees of Indian currency and you will get $1 US. So this is known as a foreign exchange rate. Correct? So what is the exchange ratio of your home currency? This is the home currency versus the foreign currency. Correct? This is known as exchange rate. What? $1 for 82 rupees. This is known as foreign exchange rate. Correct? So there are different structures for foreign exchange market. That is, there is fixed exchange rate system, there is managed exchange rate system, there is flexible exchange rate system. India falls in the category of managed exchange rate system. That is, there is a fixed exchange rate system, there is a flexible exchange rate system. Before 1991, India used to be towards the fixed exchange rate system, but now India is moving towards flexible. Right now we are towards the managed exchange rate system, where what is managed? Under this system, if there is too much fluctuation in the rates, that is, if the rate is fluctuating, let's say it is going to 75, it is going to 95, there is a huge amount of volatility or fluctuations in the foreign exchange market. At that point of time, RBI can intervene, that is, it can interfere, it can enter the foreign exchange market so that such high volatility or fluctuations can be avoided. Changes in foreign currency assets are caused by RBI's intervention as well as appreciation or depreciation of foreign assets held in the reserves. So change in foreign currency asset, this foreign exchange reserves is treated as an asset for the RBI. This foreign exchange reserve is an asset. This is an asset for the Reserve Bank of India. So what we're talking about here is it is acting as an asset. There's a term used, appreciation, depreciation of foreign assets, that is the foreign currency. What is appreciation? Let me explain. $1 is equal to 82 rupees. If this is home currency, correct? This is Indian currency and this is foreign currency. If after certain time, let's say 1 week or 2 weeks or 1 month, next day it becomes 75 rupees, we will say that the Indian currency has appreciated, that is, it has become more precious. And if it goes to rupees 90, that is, the value of Indian currency decreases, it is known as depreciation. There are different terminologies which can be used, that is devaluation, revaluation. Such are the small synonyms that can be used. But again, the concepts can be discussed in great detail we are giving you an overview as to what is exactly the news. Foreign exchange reserves also include India's reserve tranche position in IMF, that is International Monetary Fund, a branch of that is World Bank. Assets which are held on reserve in foreign currencies by the central bank is known as foreign exchange reserve. Already discussed, these are assets held as reserves in foreign currencies, mainly US dollar, pounds, euros. That is the internationally more accepted currencies. Not that you can keep any currency and say we have foreign exchange reserve. No, it is powerful or more acceptable currencies that are being kept in the reserves. If you are getting what I'm trying to explain, please let me know in the comment section. Thank you so much. Let me know. Hit the like button also. It helps me, really, it helps me to know who exactly is following my videos. These reserves are used to support liabilities and to back the monetary policy. So what is liability? As mentioned earlier, for all those students who are from commerce or non-commerce background, there are two basic terminologies, assets and liabilities. Just like any other organization, let me make a rough balance sheet for RBI. RBI has various assets and RBI has liabilities also. For example, the notes that are being printed by RBI is the liability. But on the asset side, the gold reserves that is held is an asset. The foreign exchange reserves that is held, it is an asset, correct? It includes any foreign money a central bank holds, such as US Federal Bank reserves. So foreign money, usually US dollar. Again, there is a whole story as to why internationally US dollar is more acceptable. There is a whole story behind it. If any day we will get a chance, we will discuss about it in detail. But right now, as of now, if you study the history, 100 years from now, if we go back in history, UK pound, Britain pound was the reserve currency. It was well accepted all around the world. But now in today's scenario, the US dollar acts as a reserve currency. That is in all international transactions, US dollar is most preferable because internationally economies have more trust on the US economy right now. Then the second news, hopefully you all got the first news. The second news that is coming up is the RBI increases the ceiling, that is the maximum. Increases the ceiling, that is maximum limit on fees payable to non-executive directors of banks to 30 lakh rupees per year. So there are various types of directors, independent director, executive, non-executive director. So RBI in their guidelines have issued a certain limit. You need to memorize such limit. 30 lakhs per annum for what? For non-executive directors. So RBI has increased the ceiling on fees payable to non-executive directors of banks to 30 lakh rupees per year from existing levels of 20 lakh rupees. The revision comes 2 years after RBI comes out with new guidelines for directors as per corporate governance. Again, a new term coming up. What is corporate governance? Corporate governance, corporate being in simple, let me break it down in simple terminology. Corporate, this is corporate governance. Corporate meaning company, governance meaning running. How you govern, जैसे होता है ना कि स्टेट का या एक जगह का गवर्नर है, how you are running that place. Simply you are talking about how you are running the company. What is the corporate governance, meaning how is the environment over there, where it capped the remuneration of non-executive director excluding the chair of the board. So here we are talking about it has taken 2 years for the revision to come out as per the new guidelines as part of the corporate governance. That is, various guidelines for banks have been issued on this. RBI said the banks are required to have suitable criteria for granting fixed remuneration to non-executive directors with the approval of their boards. Next key information regarding this, the instructions on review of fixed remuneration granted to non-executive directors would be applicable to all private sector banks, including small finance banks and payment banks, as also the wholly owned subsidiary of foreign banks. So it is ultimately applicable to all the banks. The instructions would be applicable to all the private banks, including this, and again this, the news is being repeated over here. The instructions would come into force with immediate effect, no dates, immediately the notification is to be again implemented. The instructions come with the execution or exercising of the power. The RBI has exercised the power of section 35B of Banking Regulation Act 1949. So there are two acts, RBI Act 1934 read along with Banking Regulation Act 1949. So these two acts read together give RBI various powers. In execution with the section 35B, they have exercised this power to keep a ceiling, that is maximum limit of 30 lakh rupees for what? For non-executive directors. If you are getting what I am saying, let me know. Yes, it is with respect to non-executive director Pari Gupta. Yes, you are absolutely correct. RBI to introduce programmability and offline functioning in CBDC pilot, that is what? Central bank digital currency. So let me give you a brief history as to what is happening regarding digital or digital currencies around the world. So you might be aware about the history of money. So how money came into existence? Earlier there was simple barter system, exchanging goods and services for goods and services. Then it was being replaced by money. Earlier form was gold, silver, all these. Then it was being replaced by paper money. Then it was being replaced by online or credit cards or plastic money. And most recent development that is taking place, that is the cryptocurrency. So the next, I must say that we are living in a decade or in a time which is very exciting because new technologies, new developments are taking place. One of these development is cryptocurrencies. You might have heard about this, that is bitcoins. Bitcoins, correct? Bitcoins are there, and there were other Ethereum and something. If any of you might be knowing about cryptocurrency, let me know in the comment section. What is Bitcoins? I know. Yes, Bitcoins was the initial one. Bitcoin is something like this, correct? So what happens is the transition that is taking place, all these frameworks are under the guidelines of RBI, are under the control of Reserve Bank of India, that is the Central Bank of India. Now what has happened in the recent times is cryptocurrency has started to develop. What is cryptocurrency? It is a form of mining. It uses the technology of mining technology, and rather than it being used as a medium of exchange, it is being used as a medium of investment. जैसे एक स्टोरी सुनी होगी ना, एक पिज्जा बॉय आया बहुत पहले, it is a very old, it has become relatively old now, this technology is becoming relatively old now. तो उसके अंदर एक स्टोरी सुनाते कि पिज्जा बॉय आया, उसको he was given 100 bitcoins. Now just imagine how much money would that be. So bitcoins are relatively new, but as time is passing by, more and more people are getting aware of it. So people are using cryptocurrencies for investment purposes, that is investing money. The money value increases for the bitcoins and they sell it. Other problems, that is for cryptocurrencies, it is not not under any regulation. As there is online money, plastic money, paper money, all this is under the regulation of a certain centralized authority. It is used for illegal payments or illegal activities also. Such cryptocurrencies are used, bitcoins are used. So what happens is that government or the monetary authorities started to discourage the use of such bitcoins or such cryptocurrencies. In fact, even when you go and read the Income Tax Act, I again coming from a finance background, let me tell you, we finance people, every time there is a certain investment we are talking about, we always look into the taxation part of it. So the cryptocurrencies, even if you look at the recent amendments that are coming up, government is charging straight away 30% of the profits is charged as taxation. So indirectly or directly, government is discouraging cryptocurrencies. So this is the backstory. Now what is happening in the parallel is that RBI is introducing its own digital currency. Which may or may not use mining technology, but again it is a digital currency. Just like paper money. For example, भाई ये देखो, जैसे I have a 500 rupee note. See, this is a 500 rupee note. So ये note की जगह, the paper money, instead of paper money, a digital form of this paper money will be introduced. And now the RBI, what RBI is doing, it is launching a pilot program. That is pilot program. What does that mean? It is going to test it in the retail sector. Testing होगा इसका कि भाई इसमें कोई problems तो नहीं है, इसमें कोई दिक्कतें वगैरह तो नहीं है. So pilot program is going to be launched regarding this. So RBI introduced programmability and offline functionality of CBDC, that is Central Bank Digital Currency Retail pilot program. In February 2024, the RBI announced the introduction of offline functionality of this, aimed at facilitating transaction in areas with poor or limited internet connectivity. So ultimately, they are trying to encourage this. Again, there are various pros and cons. Let me first give you certain pros and cons regarding this. Where is it? Okay. So let us take from the starting only. Okay. So next, the ongoing CBDC retail pilot supports person to person or person to merchant transactions. So these are being introduced. The Reserve Bank of India launched the first pilot digital rupee retail segment, that is ER, on 1st December 2022. So now they are going into, they are trying to make it a full-time thing. RBI has identified 8 banks for phase-wise participation in retail pilot projects. So these list of banks you need to memorize: State Bank of India, ICICI Bank, Yes Bank, IDFC First Bank, the Bank of Baroda, Union Bank of India, HDFC Bank, Kotak Mahindra Bank. So they are taking out heavy guns, that is big banks like State Bank of India is participating, HDFC Bank is there. So the RBI is very serious regarding this implementation of this. Additional information: CBDCs are a digital form of paper currency and unlike cryptocurrencies. So as I mentioned, cryptocurrencies, keep in mind the example of Bitcoin. If you do not know about Bitcoin, let me know in the comment section. I'll make a short video regarding this. But again, Bitcoin is a form of new upcoming cryptocurrencies that use mining technology. It is a new technology. Again, I'm not a science background or IT person, but I have some knowledge about this. What is exactly this? You need to be updated regarding this also, because from the knowledge point of view, it is very good. So CBDCs are digital form of paper currency, and unlike cryptocurrencies that operate in regulatory framework. That is what they're trying to say is it is a digital form, digital currency, correct, and there is a regulatory framework around it. So all countries around the world, I will be talking about this. You see, countries around the world are introducing digital currency. India in digital context or in this context is giving a head-to-head competition to these countries such as Bahamas. Sand dollar is introduced in 2020. Nigeria, another country, roll out e-naira. China, one of the major economies, have introduced e-CNY in April 2020. So India is going head-to-head with such economies such as China, becomes the first major economy to pilot a digital currency. So you might be understanding. So it is ultimately a form of digital currency. It is a digital currency, form of paper currency under a regulatory framework. And these are legal tender issued and backed by central bank. Of course, these are relatively new. There are various challenges that have to be executed, but it is the future we are talking about. So going forward, this is the direction that that we are getting in the monetary space. It is same as fiat money. So fiat currency, what is fiat currency? A fiat currency is a national currency, that is in Indian context INR, a rupee, that is not pegged with the price commodity such as gold or silver. So fiat currency, mentioned earlier also, what happens is the RBI earlier what used to do is if it has gold of 100 crore rupees, it could issue a liability of printing money up to 100 crores only. But now it has become into multiplications because we have removed the gold standard. So fiat money ultimately जो 500 रुपए का नोट है, as mentioned, आज luckily I have 500 rupee note. See, आज luckily I have a 500 rupee note over here. So if 500 rupee note is simply paper, but This note is very precious. Reason being, it has the value of purchasing 500 rupees worth of goods and services because it is backed by the Reserve Bank of India. So such currency, that is our national currency, which is being backed by the Reserve Bank of India, is known as fiat money, fiat currency. Additional information: objective: to mitigate the risk and trim cost in handling physical currency, cost of phasing out soiled notes, transportation, insurance, logistics, etc. So what is this? What are the positive aspects? Going into the future of this currency, ultimately I understand there are various problems and challenges we are going to face. But if we have a broader look, there are various positive aspects also. Look at this. If we go into digital form, the physical handling cost will reduce drastically. Cost of phasing out soiled note, जो नोट खराब हो जाते हैं ना, किसी नोट पे लिखा होता है रामू और वहाँ पे ऐसे बना रखा होता है रामू और वहाँ पे दिल बना देते हैं. ये भाई किसी नोट पे लिख देते हैं ना रामू दिल बना के एक दूसरा एक लड़की का नाम लिख दिया, वहाँ पे लिख दिया इतना इतना. सो दीज नोट्स और टोन अप, दीज आर नोन एज सॉइल्ड नोट्स, खराब हो जाते हैं. तो ये कॉस्ट बचेगा हमारा. ट्रांसपोर्टेशन, इंश्योरेंस, लॉजिस्टिक्स, ये ऑल दिस वुड बी सेव्ड. सो दीज आर पॉजिटिव पॉइंट. It will also wean people away from cryptocurrencies as means of money transfer. So cryptocurrencies, why it is becoming more popular? Because it is easy to use. Anyone can use it. Money can be transferred cross border easily. So as this has already been covered. Significance of CBDC: cross border transactions. Instant settlement feature of CBDCs as a significant advantage. You want to make payment to US, do it right now, done, finish. Making cross-border payment cheaper, faster and more secure. For example, again, if you need to make foreign payments, for example, I need to make payment for colleges in abroad. Many of the students watching this video are young students. You want to go outside, you need to pay in dollars. To make the payment in dollar, you need to buy the dollar. When you buy the dollar from the banks, bank charge commission on that. So that commission increases the cost. It becomes expensive for the users. And also there can be many delays. You need approvals from RBI, etc., etc. So this is cheaper, relatively quite cheaper. This is faster and more secure. CBDC can gradually bring a cultural shift towards virtual currency by reducing currency handling cost. The regulated reserved backed money circulation of traditional banking system. So this is again going to bring a transformation. It is already bringing a transformation. For all those students who do not know about cryptocurrency, all those students who do not know about Bitcoin, go and study about this. You will get to know people are using it tremendously. So what are the challenges in adopting CBDC? So there are obviously various challenges, such as privacy concerns are there. Your information can get leaked. Your data can get hacked. Disintermediation of banks. For example, the roles of banks might or get affected in a very different manner. If e-cash becomes popular, that is e-rupee, and the Reserve Bank of India places no limit on the amount that can be stored in the mobile wallets, weaker banks may struggle to retain low cost deposits. What are they saying? Let me explain. For example, आज के टाइम पे हम क्या करते हैं, हम अपना पैसा बैंक के पास डिपॉजिट करवाते हैं. वी कीप आवर मनी एज डिपॉजिट्स विद द बैंक and as and when required we use the money, correct? The banks, by using money multiplier effect, circulate these deposits. These are cheap deposits, because on the savings account they only have to pay 2, 3, 4% maximum, correct? So banks are running their businesses on deposits. The main function is to accept deposit, to provide loan. Now when CBDC introduces this, that is, let us call this digital money, digital rupee, okay, what will happen is people will keep e-money, e-rupee in their wallets, just like wallet of Paytm, etc., etc. They will keep money over there, and the deposits in the bank will start to dry up. If the deposits will start to dry up, it is a concerning point that the banking system can fail if not properly guidelines are issued by the RBI. Operational risk of intermediaries, as the staff will have to be retained, groomed to work in CBDC environment. So more training is required over here. So these are certain concerning points that are there. Next, we're talking about the next news that is coming up. Let me know, students, if you are enjoying it. Whoa, John Joe. Let me know if you are enjoying this, and any doubts you can hit me up. Interest equalization scheme on pre and post shipment rupee export credit. So this is a scheme. What happens is, Government of India introduces various schemes to simply encourage or support exports. In fact, there is various policies also. Import-export policies are there, where government tells us about the coming 5-year policies that they are going to introduce, all the schemes that they have introduced. This is one of the schemes that they are talking about. So let me first take you exactly as to what is the scheme. So here you go. First, let us discuss about what is interest equalization scheme, and then I will take you to the news. It is launched in the year April 2015, launched by Ministry of Commerce and Industry, monitored by Directorate General of Foreign Trade, DGFT, and the RBI through a consultative mechanism. So it is monitored by DGFT. This term is going to be repeated again and again. And the RBI through consultative mechanism. The aim is to provide pre and post shipment export credit to exporters in rupees. So what is this? So basically, exporting India, what our current government wants is to make India an exporting hub. There are various projects that are being launched. For example, you might have heard Make in India. But what is Make in India? To make projects in India, to make manufacturing in India. बनाओ इंडिया के अंदर, सामान बनाओ इंडिया के अंदर, ताकि हम इंडिया से एक्सपोर्ट करें. सो व्हाट द गवर्नमेंट वांट्स टू इम्प्रूव द एक्सपोर्ट सेक्टर ऑफ इंडिया. इंडिया में बनाओ, एक्सपोर्ट करो. सो एक्सपोर्टिंग रिक्वायर्स अ लॉट ऑफ फंड्स. एक्सपोर्टिंग रिक्वायर्स अ लॉट ऑफ फंड्स. फॉर एग्जाम्पल, अब मुझे मान लीजिए बाहर से एक ऑर्डर आया, मैं एक्सपोर्टर हूँ. मैं कौन हूँ बच्चों? आई एम ए एक्सपोर्टर. मेरे को बाहर से ऑर्डर आता है, मान लो 100 करोड़ का ऑर्डर मिल गया, 100 crore rupees I get an order. I don't have the money. So how will I execute this? So before making the shipment, support, I need finance. So the exporter will get credit in rupees before shipment, and even after making the shipment, there are certain finances. If I require support, I will get this also. So this is the ultimate aim of the scheme. What are the features of this scheme? Initially, it was valid for 5 years, from 1st April 2015, 31st March 2020. As you might be aware, in 2020, all around the world, we were hit with the pandemic of COVID. So for 1 year, it was extended during the year of COVID. Due to COVID, it was extended. So the scheme provides an interest equalization benefit at the rate of 2% on pre and post shipment rupee export credit to merchants and manufacturer exports of 410 items, tariff line at 4-digit levels, and 3% to MSMEs manufacturing exports. So basically, under this scheme, certain identified items, certain identified manufacturers who complete the requirements as specified are given cheap amount of loans. So features, again more features are there. Let us come to the news. Just one or more few features. The scheme has now been made fund limited, and the benefit to individual exporter has been capped at 10 crore rupees per annum as per IEC code. So what is IEC code? It is a license. जैसे होता है ना गाड़ी का लाइसेंस होता है, वैसे ही at the time of importing you require a license, that is known as IEC code. So it is being capped at 10 crore rupees per annum. The maximum benefit or the maximum fund that you can receive is 10 crore rupees. In addition, the banks that lend to exporters at an average rate of more than repo plus 4% would be debarred under this scheme. So let us now, this is the overview of the scheme. Now let us come to the exactly what is happening over here. So the rate, the government of India has allowed for extension of this scheme. So government of India is simply this scheme. We talked about this scheme कि भाई ये कब था. This is basically to provide credit to exporters in rupees ये कब था, और they are simply talking about extending the scheme up to June 30th 2024. So government is planning to extend it, and this is again the repetition of the news as we already discussed. This is the repetition of this average interest rates. Again, this is all the repetition that we have already discussed in this. Government has advised the following modifications to the scheme based on assessment undertaken for financial year 23-24. Director General of Foreign Trade DGFT will identify the banks which are in breach of the above provisions. Such banks shall be restricted from participating in the scheme till they furnish an undertaking to DGFT. So various guidelines are being issued. These are the guidelines that are being covered. Again, cap of subvention, again 10 crore rupees is the cap. This you need to memorize, right? 10 crore रुपए का limit है of as per IEC code, per license के हिसाब से this is the limit, and the same has been communicated to trade and industries, and by this is ultimately nothing. You can just read it. Major parts I have already covered. That is 10 crore rupees limit is there. It is being extended up to 30th June 2024, and पहले originally 5 साल के लिए था, वो भी extend हुआ, and all this. Next, the next news that is coming up, let us discuss about this. The next news that is coming up, okay. So we are talking about SEBI. भाई फाइनेंशियल न्यूज़ की बात कर रहे हैं और SEBI भूल जाएं, ऐसा कैसे हो सकता है? Securities Exchange Board of India issues advisory against fraudulent trading schemes claiming to be offered to Indian residents by FPIs. भाई ये तो बड़ा serious, this is a very serious matter. You know, fraudulent schemes are being sold. ऐसा हो रहा है ना? You know, there are various social media groups that are popping up. Social media, you can say videos, Telegram groups are there, WhatsApp groups, etc., that are trying to sell various schemes to individuals, retail investors. So this advisory note is for certain specific type of fraud that is taking place. Again, if I say many types of frauds are there, so this is targeting a specified type of fraud that is taking place. Securities Exchange Board India has been receiving number of complaints against fraudulent trading platforms which falsely claim or suggest affiliation with SEBI registered foreign portfolio investments and claiming to offer trading opportunities through FPI or foreign institutional investors, sub-account or institutional account with special privileges. So what they're trying to say that SEBI is ultimately receiving many complaints. What are the complaints related to? That people are being sold schemes, इनको स्कीम बेच रहे हैं ये बोल के कि भैया हम जो है ना we are certified by SEBI. You know, there are SEBI registered advisors also. So all those who are not SEBI registered advisors need to specifically disclose it that we are not SEBI registered advisors. Now here what the problem is, that trading platforms are falsely claiming to be SEBI registered. So this is specifically for foreign portfolio investors, that they are claiming to be foreign portfolio investors which are SEBI registered. So steps taken, fraudsters are they are basically frauding victims through online trading courses. Seminars are being conducted, mentorship programs in the stock market, leveraging social media platforms like WhatsApp, Telegram, as well as live broadcasts, false names to orchestrate their schemes. So ultimately, you might be aware regarding this. Various accounts can be hacked. You know, my account was on Instagram. I was shocked to see that people are literally, you know, copying your account. That the person, I don't know who he was copying my account. It was a fraud account he created, and he was messaging my students. Literally, he was messaging my students to give them to deposit money. I was shocked regarding this. So I instantly uploaded a video or a status that it is a fake account. So similarly, many such platforms are cropping up where they are falsely claiming to be SEBI registered foreign portfolio investors, and they are, you know, ultimately taking away the hard-earned money of the investors. So social media, you need to do your due diligence before depositing any money, before clicking any, you know, link. All the due diligence needs to be done. So SEBI is taking advisory action against them. Posing as employees or affiliates of SEBI registered FPIs, they coax individuals into downloading applications that purportedly allow them to purchase shares, subscribe to IPOs, and enjoy institutional benefits, all without the need of official trading or a demat account. So this is what they are saying कि आपको सब बेनिफिट मिल जाएगा, आपको सब बेनिफिट मिल जाएगा, आप सिंपली एक अकाउंट ओपन करवाइए. यू नीड टू ओपन दिस. फॉर एग्जाम्पल, अगेन simple English is there, they are portraying to be someone else. These operations often use mobile numbers registered under false names to orchestrate their schemes. So calling, etc., etc. Clarification for investor: it is important for the public to understand that foreign portfolio investors investment route is unavailable to resident Indians with limited exceptions only. So हर कोई को वो स्कीम में इन्वेस्ट करने के लिए मिलता नहीं है. SEBI Foreign Portfolio Investor Regulations 2019. So this is basically an awareness that is being spread, that be aware from such fraudulent trading schemes. There is no provision for an institutional account in trading. The direct access to equities market requires investors to have trading and demat account. So simply what they are saying is there is nothing, no such thing as institutional account. If you want to purchase shares, ultimately you need a dematerialization account. As simple as that. बच्चों बहुत easy बात है. If you want to purchase share, go and get a demat account. There are various discounting there are various what is it called, discounting brokers are there. ना के बराबर फीस चार्ज करते हैं, 80 रुपए 100 रुपए पर डे के पर मंथ के हिसाब से, and that is literally nothing when it comes to purchasing मतलब amounts of equity capital you can purchase. So open a demat account. That is simply what SEBI is saying. SEBI has not granted any relaxation to FPIs regarding securities market investment by Indian investors. SEBI urges investors to exercise caution and to steer clear of any social media messages, WhatsApp groups, Telegram channels, or apps claiming to facilitate stock market access through FPIs, FIIs registered with SEBI. So they are simply saying you should be aware before taking such actions. WhatsApp group वगैरह में कुछ नहीं मिलने वाला. Telegram group claiming that इतना रिटर्न मिल जाएगा, screenshots they take. You need to do your due diligence on this. Such schemes are fraudulent and do not have SEBI's endorsement. That is what they are clarifying. The next scheme, the next news that is coming up, that is relating to RBI. According to RBI, no further deposits or credit transactions or top-ups shall be allowed in any customer accounts after 15th March. This is in relation to Paytm. Paytm Payments Banking Services. So earlier आपको पता होगा कि the deadline was held, that is 29th February. It has been extended to 15th March. What we are talking about in February news. In a press release issued, the Apex Bank said that the decision was taken keeping in view a larger public interest, including the merchants. It clarifies that customers can make deposits, credit transactions, prepaid services, wallets, FASTag, national common mobility cards till 15th March. So ultimately date extension, simple news, a date extension is there. The central bank added that it has put certain business restrictions on Paytm payments operated by this under section 35A Banking Regulation Act 1949. So certain restrictions have been exercised. So with this is again, if you're liking this video, give me a thumbs up. It really encourages me. So let me see, give me a thumbs up if you're liking this video. Let us move ahead. So RBI asks credit card network to stop unauthorized payments via business cards. So this is very exciting news. So there are 5 major card networks: Visa, MasterCard, RuPay, American Express, Diners Club. So what was happening is, let me first explain you the exact problem that was there. Here is the problem. Under this arrangement, referred to as business payment solution providers, an intermediary accepts commercial card payments from corporates. So there is an intermediary. What was happening was, there is an intermediary there is a corporate companies, big businesses you can say. So these companies have cards, business cards, credit cards, debit cards, etc. Commercial cards are there. They accept payments on their behalf, and what they do is they transfer this payment to those individuals who are non-card, what is the exact term, non-card accepting recipients. Those recipients who do not accept card payments, non-card accepting recipients. So what they were doing is they were accepting payments from card holders and transferring through NEFT, IMPS, RTGS to those who are non-card accepting recipients. For example, मुझे पैसा चाहिए, मेरे पास कार्ड का फैसिलिटी नहीं है, but you have a card, you want to make the payment to me, there is an intermediary who will take your payment and then transfer that payment to me. It was observed that this arrangement qualified as payment system, and which comes under the regulation of what? Under the regulation of RBI. So RBI has issued an notice on this. The RBI said it has directed a card company, a card network to stop unauthorized arrangement for payments through business cards. So there are five card networks. But in this news, exactly RBI has not named the network. RBI ने नाम नहीं दिया उसका. The regulator said only one card network has operationalized this arrangement in the country so far. So it is regarding that. Visa had issued a statement on 14th February saying that it has been asked by RBI to stop such incremental transactions until further notice. So you need to remember, first of all, there are 5 card networks. Out of this, RBI has not named, but Visa company has issued a statement and they are saying that RBI has issued a notice to them. So ये आपको उस तरीके से याद रखना है, वीजा भैया ये याद रखना है, वीजा. Okay. So problem क्या थी? I have explained the problem. Under the provisions of Payment Settlement System Act 2007, such a payment system requires authorization under Section 4 PSS Act, which has not been obtained in this instance case. The activity was therefore without legal sanction. So this is basically they are saying that they need to stop this. Visa company needs to stop this. RBI is telling the Visa company to stop this, and it is saying that it is not legally sanctioned. That is, indirectly they are saying that it is illegal. So the next news coming up is RBI allows banks, non-banks to issue PPIs for public transport systems. So what is PPI? Prepaid payment instruments. Prepaid payment instruments. For example, all those people living in Delhi NCR, you might be knowing that we travel by metro. Metro है ना, DMRC, Delhi Metro Rail Corporation. So what they're saying is that you can issue a instrument, for example a card, simple card with a cap. This limit is 3000. With a limit of 3000, this card with a limit of 3000 can be used for public transit, public transportation के लिए ये use किया जा सकता है. So the RBI allowed banks and non-banks to issue prepaid payment instruments. जैसे वो Delhi Metro का कार्ड नहीं होता, अभी है नहीं मेरे पास, otherwise I would have showed it. So Delhi Metro का there is a card, get a recharge done and you can use it easily. So similarly, banks and non-banks can issue such PPIs for public transports, metros, buses, rails, waterways, tolls and parking. It can be used. The limit should be 3000. PPIs are instruments that facilitate purchase of goods and services, financial services, remittance facilities, among others, against the value stored in them. The regulator amended the guidelines of PPI for mass transit system. In the latest the RBI said PPIs for the mass transit system would contain the automated fare collection application related to transit services. Again, technical points, toll collection, parking charges. It said such PPIs would be issued without KYC verification of the holder. So they are trying to make it more publicly acceptable and easy for the public, due to which no KYC is required over here. Again, 3000 is the limit. You need to memorize such data. PPIs that require RBI approval before issuance are classified into two categories. These are small PPIs and full KYC PPIs. Next, small PPIs are issued by banks and non-banks after obtaining minimum details. Choti moti detail lo and you will be issued the small PPI, and full KYC PPI, as the name suggests, full KYC is required, are issued by banks in this after completing the KYC of PPI holder. What is the difference? They are authorized only for purchase of goods and services. Fund transfer or cash withdrawal from such PPI is not allowed. Fund transfer, cash withdrawal, not allowed. But here everything would be allowed. नाम से समझिए ना, small PPI, some restrictions would be there. Full KYC not done. Full KYC PPI, full KYC is done, and almost all the restrictions are removed. So with this we come to the end of today's session. Hopefully you all like today's session. Let me know in the comment section, and also hit a like on the video, guys. ये वीडियो को जितना लाइक कर सकते हो अपने दोस्तों के साथ शेयर करो, share it with your friends and give me a thumbs up. So with this we come to the end of this session. Thank you so much. Bye bye and take care until we meet.